Welcome to Invest, Build, and Prosper with Zach Matson, the podcast where we dive deep into the world of real estate, land investment, and development. I'm your host, Zach Matson, and every week we'll break down the strategies, tips, and tools you need to turn your real estate goals into reality. Whether you're just starting out or a seasoned investor, this is your go-to source for analyzing deals, uncovering opportunities, and learning how to build wealth through land and development. From understanding market trends to navigating legalities to maximizing returns, we cover it all with insights from experts and real-world examples you can use right now. Ready to invest, build, and prosper? Let's get started. Are you making good money but have no clue how to invest it wisely in real estate? Or maybe you want to invest, but with all the high prices and sky-high interest rates, you just can't seem to find a good deal. Here's the thing, you're not alone. Tons of high-income earners are looking to invest in real estate but feel stuck because they don't have the time or the experience or just can't find the right opportunities. Well, today I'm here to help you with that. In this episode, I'll share 7 passive ways to invest in real estate, no hands-on experience needed. Let's unlock some wealth. So why real estate? Real estate is one of the best wealth building tools out there, and here's why. First, steady cash flow. Real estate can provide a consistent source of income through rent or dividends. Then there's appreciation. Over time, property values tend to go up, which increases your net worth. There's also forced appreciation, which is what it sounds like, forcing appreciation through property improvements. This can be done through house flipping or, my favorite, development and new construction. There's also something called leverage. You don't have to buy real estate with 100% of your cash or even 50%. You can reap 100% of the upside potential in real estate by leveraging 75 to 100% of the purchase price. This is the biggest piece that many people don't consider when looking at real estate as an investment. We play with the house's money. When we're talking about passive investing, you're still benefiting from leverage to maximize your return or secure your investment further. What I mean is this, if I use $50,000 of your money to buy a $300,000 property with $100,000 in repairs, and that property is now worth $550,000, you helped me create an additional $100,000 in equity out of nowhere, further securing your investment. Real estate investors often benefit from tax deductions, depreciation, and other incentives that put more money back in your pocket. It also diversifies your portfolio, helping you balance your investments between stocks, bonds, and tangible assets like real estate. Speaking of that, real estate is a tangible asset. You can see it, touch it, and know it's real, unlike many other investment types. Whether you are investing in a flip house, an apartment complex, commercial building, or bare dirt, you can physically visit your investment and see how it's doing. And here's the best part. You don't need to actively manage properties or deal with tenants to benefit from all of this. That's where passive real estate investing comes into play, and I'm about to show you how. Let's break down 7 passive ways to invest in real estate, even if you're busy or have zero experience. The first is real estate investment trusts, also known as REITs. REITs are publicly traded companies that own and manage real estate. You can invest in them just like buying stocks, and they offer you access to large real estate portfolios without needing to own a property yourself. The benefit? It's easy to start, just open a brokerage account and buy shares. The downside, market volatility. The price of REITs can go up and down just like stocks. Next up, we have crowdfunding platforms. These platforms let you pool your money with other investors to buy into large real estate projects. Think apartment complexes or commercial buildings. The benefit, low minimum investments, so you don't need tons of capital to get started. And the downside is some projects are riskier and less liquid, meaning it could take years before you see returns. The third is turnkey properties. Turnkey properties are another great option. These are properties that are fully renovated and managed by a company. So you buy them and start earning rental income right away with no need to handle the day-to-day. The benefit is instant cash flow without any property management hassle. The downside is you'll likely pay a premium and your returns might be lower than if you were more hands-on. Furthermore, large capital expenditures like a new roof or HVAC system can wipe away years of cash flow on one single transaction. The fourth is private real estate funds. Private real estate funds work similarly to REITs, but are privately managed, typically with longer hold periods and higher returns. These funds are for accredited investors, meaning they require a higher net worth to get involved. The benefit is access to exclusive deals and higher quality assets, and the downside is it's less liquidity and longer hold times compared to REITs. The fifth passive strategy is real estate syndications. With syndications, you invest in large-scale properties like apartment buildings by partnering with an experienced sponsor. The sponsor handles all the heavy lifting, from buying to managing the property, while you earn a share of the profits. The benefits is bigger returns and truly hands-off investing. The downside, these deals often have higher buy-ins and longer hold periods. You typically need to be an accredited investor or personally know the sponsor of the syndication in order to have access to these investments. The sixth is private money lending. Private money lending lets you lend your capital to real estate investors like house flippers or developers like me and earn interest on the loan. It's one of the most straightforward passive investment strategies. The benefit is high returns with fixed terms. Anybody can do it, and you don't need to manage a property. For example, on many of my development deals, I put private money from everyday people to work, typically with 10 to 12% annual returns. The downside? The risk is that if the borrower fails, you could lose your money. This is mitigated through having a deed on the property with plenty of buffer and property value before your money is at risk. The seventh strategy is partnering in real estate deals. Finally, if you can partner in real estate deals by providing capital while someone else, often an experienced investor or developer, handles the day-to-day operations, you earn a share of the profits without doing any of the heavy lifting. The benefit is high return potential as you're part of larger deals. As an example, this is another way that I work with investors on my own deals. If someone has enough capital to fund an entire deal, whether that is a single house or build job or a larger development, they can experience phenomenal returns on their investment without having to put much effort in. The downside, choosing the wrong partner can put your investment at risk, so vetting is crucial. Now, I want to share two specific examples of how I help everyday people like you invest passively in real estate while earning great returns and helping me to scale my business. The first is on my very first development deal. I have a very good friend that I've known for over a decade that decided to be a private money lender from the beginning of my development deal. He invested $185,000 at 3 different phases during the development, and he ended up earning a $59,000 or 31.9% return over an average period of 2.5 years. As an annualized return, this was about 12.76%. This was a win-win situation as it provided great mortgage-backed returns to him and allowed me to do a bigger deal than I otherwise could have. Another example is on my very first build job. I partnered with a money partner that bought a lot with cash for $98,000. Once we had permits, he refinanced half of that with a construction loan and used the freed up capital as liquidity during the construction process. So overall, he was still invested for about $100,000, and from start to finish to permit, build, sell, and close, it took 12 months, and we each earned a $53,000 profit. For him, this was a 53% return on investment in a single year. For me, it was an infinite return as I didn't have to use my own money, but I did manage the entire project from start to finish. This partnership allowed me to add income and another deal while I had other projects in the pipeline as well. Overall, it was a win for both of us, and we provided a new homeowner a brand new home that they loved. Now it's your turn. Here's your action plan. Assess your financial goals. Are you looking for long-term appreciation, monthly cash flow, or a mix of both? Decide how much you want to invest and your risk tolerance. Do your homework on each of these passive strategies, especially when considering private lending or partnerships. If you're interested in learning more about potential passive investment opportunities I may have, send me a message today and we can discuss options. There's no one size fits all. The key is choosing a strategy that fits your lifestyle. Ready to unlock wealth? Start building your real estate portfolio today. If you found this video helpful, hit the like button, subscribe, and drop a comment with any questions you have. Don't forget to check out the next episode in the Invest, Build, and Prosper series, where we dive into even more ways to grow your wealth. For personalized advice or to work with me directly, head to my website or connect with me on social media. Let's unlock our future together.